Hi everyone, I'd like to make a quick video today, especially on self-employed clients, those who have plans to purchase a property in near future or they would like to do some refinance on their existing homes. So just as an example, I'll be taking a purchase price or an appraisal value of an existing home for 1,025,000. Okay? And the main idea to make the video today is just because oftentimes I do receive a lot of phone calls from the clients, especially from self-employed sector, or sometimes some real estate agents do actually reach out and they say that my clients would prefer to have a mortgage, especially from an A lender. So the idea is to explain why a self-employed individual should continue purchasing a property and yet get a mortgage from an alternative lender or a B lender as opposed to as an A lender. Now, as a quick disclaimer, this video uh, is not made with an idea where we are trying to discourage A lending business. Uh, I do a lot of A lending business as well, but as long as the client is filing their taxes and they are qualified, absolutely, by all means, there is no brainer. Definitely go with an A lender. Now, with especially self-employed sector uh, or clients, they tend to generally not declare much of an income in their tax documents. So the whole purpose of this video is to make a comparison between why with an A lender, because you do actually tend to save more money with B lender as opposed to an A lender. Okay, so as mentioned before, as an example, I'll be taking a purchase price of a property for 1,025,000 or an appraisal value of a property for 1,025,000. So if a self-employed individual with an A lender goes with a 20% down payment on an average interest rate of 4.25%, the funding amount it's going to be $820,000, which on an average the monthly mortgage payment will be around $4,034 per month. And in order to qualify for that kind of property, on an average, you need an income of $155,000 annual income. So all these details will be shared on the screen just so that you take a look how these calculations are being done. Now, in addition to that, if we do need $155,000 annual income to qualify for a 1,025,000 property, so the average taxes what any given individual would have to pay in a province of Ontario, there are two taxes you need to pay. Number one is a federal tax, number two, a provincial tax. Adding those taxes up, on an average, the taxes what you end up paying is about roughly 53,983,000. Okay, so that's one of the expense you have to pay year over year over year, just so that for the entire term with an A lender you get qualified for that mortgage. In addition to that, you also have to pay the interest only payment as well. In addition to the principal payment, the interest only payment for the very first year on $820,000 funding amount at interest rate of 4.29. The first year interest you pay is roughly about 34,600. When we add the income tax what we had to pay plus the first year interest what we had paid just on an A lending side, a total of 88,500 just to sustain that mortgage. Now let's do a quick comparison on an alternative or a B side. Same property, 1,025,000, 20% down payment, which is $205,000, a funding amount of $820,000. Your monthly mortgage payments becomes at the interest rate of 5.44 on an average. The monthly payment becomes $45.93 per month. Now, with that kind of a monthly payment, yes, any average person will be doing a quick math. With B lending, we are paying an additional roughly $500 more every single month over to a B lending. Now that equates to $6,000 annual payment with a 3 years term, whether it's an A lending or a B lending. So on a B lending side with a 3 years term at 5.44, your entire term for 3 years becomes $18,000 payment, which you will be paying more towards a B lending. Now, just hang with me just for a quick moment. I'll show you just in a minute how you would be saving in a long run on your mortgage and as well as overall on your payments, staying with B lending as opposed to an A lending. Now, with a 3 years term, a first year interest only payment in addition to your principal on a B side at 5.44, the interest what you will pay is roughly about 44,800. Okay, yes, it's a little more than with an A lending, but on the other hand, the beauty about that is the mortgage is done with a B lending, not based on your tax documents. Instead, it is getting done based on the deposits what the lenders see in your bank account. So that said, you have the power, you have the control as a self-employed homeowner or as a taxpayer to control your CRA taxes, that how much taxes you have to pay. Based on your accountant guidance, you pay the taxes accordingly. So B lenders don't look at your notice of assessments, they generally don't look at your T4s, they generally don't look at your T5s or even T1 generals. They don't look at any of those documents. So as long as you have a solid deposits coming into your bank account, the mortgage will be done generally with B lender. Okay, so if I do a quick comparison between an A lender and a B lender, so hypothetically saying if there are next to minimal taxes or income taxes need to be paid on a CRA side, the only payments I'm going to factor in from a B lending would be 43,800 versus 88,500 payment, which you would need to sustain on an A side. So clearly, folks, we learned today that there are a huge savings just in 1 year alone, over $44,000. You keep that money in your own pocket, just staying with a B lender. So for more information, please reach out to the number below, and I'll be more than happy to have a quick chat with you folks. Thank you so much. Have a great day.